and thanks for tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, RealEstateSINY.com's mortgage and economics reporter. After the past 2 weeks of the mortgage rates going down, this week they went back up slightly. The 30-year fixed rate went up to 4.59%. The 15-year fixed rate went up to 3.65%, and the 5-year adjustable rate went up to 3.57%. These increases are from the newly released economic data, the ride in the financial market, and the Federal Open Market Committee's meeting statement. This week, there were 4 newly released reports for the economic data. The first 2 dealt with the housing market. The next was on economic growth, and the last was on the employment sector. The first report we looked at was the pending home sales for June. This report was released on Monday, July 29th by the National Association of Realtors. In this report, they talk about June and May's revised pending home sales index. They revised May's pending home sales index downward from 112.3 to 111.3. For June, the pending home sales index was at 110.9, down 0.4% from May. Since home prices have been rising and the mortgage rates have been going up, it is getting harder for some home buyers to afford homes. The other housing market data was released from the U.S. Census Bureau on Tuesday, July 30th. This report was on residential vacancies and homeownership for the second quarter of 2013. So far, for both the first and the second quarter of 2013, the home ownership rate has been at 65%. As for the national vacancy rate, it was at 1.9% for the second quarter. This is down 0.2% from the first quarter, which means that more people are actually living in their homes instead of renting a house or renting their houses out. After the housing market, we took a look at the newly released report on the GDP advanced estimate for the second quarter of 2013. This report was released on Wednesday, July 31st by the Bureau of Economic Analysis. In this report, they updated their first quarter real GDP as increasing from 1.8% to 1.1%. For the second quarter, the real GDP is increasing by 1.7%. According to their advanced estimate. This number will also be revised over the next 3 months once they have more clear data. Also, on Wednesday, July 31st, ADP released their National Employment Report for July. For the private sector, there were 200,000 jobs added in July. But since this report was released on the last day of the month, this number will be revised next month. Out of the jobs added in July, small businesses added about 82,000 jobs, medium-sized businesses added about 60,000 jobs, and large businesses added about 57,000 jobs. ADP also revised the amount of jobs added to the private sector in June. They revised it upward from 188,000 to 198,000. This report has brought some optimism back into the economy since so many jobs were added to the private sector. The financial markets had a bumpy ride this week. At the end of last week, the Dow Jones was increasing during the day, then dropped overnight, but once Monday, July 29th came, it started decreasing. On Thursday, July 25th, the Dow Jones opened at just under 15,540. By closing Wednesday, July 31st, it was at just under 15,500. The S&P 500 had a slightly steadier ride, not fluctuating too much and staying between 1,685 and 1,692 from Thursday, July 25th through Wednesday, July 31st. The interest rates were also up and down this week. They had started at 2.61% on that same Thursday, but it had gone down to 2.60 by Wednesday, July 31st. After looking into the economy itself, we took a look at how Americans think the economy is doing through a report from Gallup.com. On Tuesday, July 30th, Gallup.com released its Economic Confidence Index report, which is based off of the results from the week of July 22nd through July 28th. Since there wasn't much happening last week with the economy and the housing market data actually went down, Americans lost a little bit more optimism in the economy. The first poll on Americans' net ratings of economic outlook was just about the same as last week, except that the percentage of Americans that think the economy is getting better went down from 43% to 42%. The second poll on Americans' net ratings of current economic conditions was also just about the same as last week. The only change was the percentage of Americans that think the current conditions are poor, which came in at 35%. With Americans having even less optimism in the economy, Gallup.com's weekly economic confidence index went down from -12 to -13. With the mortgage rates rising, less people are applying for mortgages. On Tuesday, July 30th, the Mortgage Bankers Association released their weekly application survey for the week ending July 26th. Their market composite index came in another 3.7% lower, and the refinance index came in 4% lower than last week's results. As for the refinance shares of mortgages applied for, it continued to stay at 63%. Lastly, we looked at the Federal Open Market Committee's meeting statement, which was released after the meeting was over on Wednesday, July 31st. The statement was just about the same as it has been in the past statements that Chairman Ben Bernanke has made. They have decided to continue with their quantitative easing program until the unemployment rate drops below 6.5% and the economy is at a good place. The only difference in this report was that the Federal Open Market Committee thinks that the economic activity is growing at a modest pace instead of a moderate pace, and that the economy is actually picking up in the coming months. So don't worry, there is still no definite date as to when they will be ending the quantitative easing program. After ADP's employment report and the statement from the Federal Open Market Committee, Americans gained some optimism back in the economy, which we can see through the stock markets. On Thursday, August 1st, the stock markets came back up between the opening and closing bells. The Dow Jones went from about 15,500 to slightly under 15,630. The S&P 500 went from about 1,690 to over 1,700. If the stock markets continue to increase and we see more optimistic news for the economy next week, the mortgage rates might actually come down slightly. Make sure you check back with us each week at trendingsiny.com and here on YouTube to see where the mortgage rates will go next. Thank you for watching. Be sure to like us on Facebook, follow us on Google+ and Twitter, subscribe to our YouTube channel, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with RealEstateSINY.com. RealEstateSINY.com is a full-service real estate brokerage located on Staten Island. If you're looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestateSINY.com.